All right, let's dive right into this explainer. Today, we're unpacking a massive, highly concentrated signal that just flashed across the Asian markets. The KOSPI has just gapped up to a record high of 8,476.15. But listen, this isn't your standard run-of-the-mill market rally. Not at all. Beneath this aggressive AI re-rating lies a massive foreign supply chain repositioning. So we're going to break down exactly how capital is flowing right now and how these Asian market signals serve as a direct transmission mechanism straight into the U.S. Open. The sheer velocity of this move is honestly staggering. A 3.55% rally just to hit an all-time high? Yeah, that doesn't happen in a vacuum. To really understand why this matters, we have to look at what's already baked into the price. This jump is being fueled by a powerful combo of Asian initial conditions and some critical U.S. validation factors. A huge part of this backdrop is the overnight U.S. session, specifically Snowflake, which saw an unbelievable 37% surge overnight. That incredible software strength practically laid the immediate groundwork for the explosive gap up we're analyzing today. So the real question is, what's the transmission path? How did the specific momentum actually trigger? Well, it's a powerful three-step stack. It all kicks off with a major structural catalyst, Nvidia CEO Jensen Huang's visit announcement to Korea. And this wasn't just some speculative chatter. It was grounded instantly in physical reality. Why? Because on the exact same news cycle, Samsung announced it's shipping its first 12-layer HBM4E globally. Boom. Suddenly, the Nvidia HBM partnership is anchored in a fully delivered product. And if that wasn't enough, you layer on step 3, a massive 2 trillion Korean won government GPU project. We literally have a perfect storm of hardware and policy catalysts stacking up in a single trading session. Now, when this huge hardware catalyst meets concentrated domestic demand, the market action just becomes explosive. That 2 trillion won government GPU project we just talked about, it selected preferred partners and firmly anchored an IT services re-rating in executable government demand. And that triggered an absolute wave of concentrated domestic institutional buying. We're talking 2.37 trillion Korean won flowing directly into the AI conglomerate stack. Domestic capital aggressively stepped in, absorbed the foreign flow, and basically drove large cap concentration to mechanical extremes through pure arbitrage. But we absolutely have to look beneath the surface to see the real structure here. The internal mechanics reveal that this record high rests on incredibly narrow breadth. This is definitely not a broad market lifting all boats. Actually, looking at the data, only 21.7% of stocks advanced during this session. What we're witnessing is domestic capital crowding specifically and almost exclusively into AI conglomerates. To put it in perspective, large caps gained nearly 4%, while small caps actually lost 2.4%. It's a highly targeted, concentrated regime holding the index up purely on internal mechanics rather than broad market demand. And this brings us to the critical canary in the coal mine, foreign positioning. While domestic institutions were out there indiscriminately buying the AI stack, foreign capital was executing a very specific divergent strategy. They distributed 1.03 trillion won in cash strictly from a single compute layer name, SK Hynix. But here is the key takeaway. They didn't just exit the market. No way. Simultaneously, they aggressively accumulated 4 power infrastructure decliners on price drops. They're literally selling the compute chips and buying the power grid. This tells us loud and clear that they aren't exiting the AI thesis, they're simply repositioning within the supply chain. Compounding the fragility of this incredibly narrow market is a truly staggering number, nearly 4.2 trillion won. That is a one-year record short overhang sitting directly against this narrow breadth rally. And here's why this is absolutely crucial to our structural thesis. This short pressure is heavily led by foreign capital. So you've got a situation where the market is hitting an all-time high, fueled by concentrated domestic buying, while a record wall of foreign short pressure built up against the large cap names. It's like a tension wire pulled completely taut, creating an incredibly specific and delicate risk condition. Okay, so how do we actually translate this Asian market setup into the US session? Shifting our focus to execution mode, our primary target asset is US AI software. Because foreign capital is rotating out of the Asian compute layer, the continuation of this AI momentum completely depends on US software demand picking up the baton. To confirm this is happening, our absolute validation line in the sand is NASDAQ futures at exactly 32,097. This was the pre-market price level, and it acts as the strict objective threshold for the entire structure we've just mapped out. Based on that setup, the strategy for tonight dictates a very clear hierarchy. You're going to want to favor US AI software and enterprise infrastructure over the core compute layer. The pre-market strength we saw from Nvidia already confirmed that the broad AI theme is holding up at its source, but the real open question is the direction within that theme. Since we know foreign capital in Asia was rotating out of compute and into infrastructure, we need to mirror that exact logic in the US session. We're actively watching for software and infrastructure to take the lead. Let's break down the exact validation scenarios against that 30,297 NASDAQ futures line. It's really a simple binary test for the market open. If the price holds above 30,297, the AI sector upside scenario remains entirely valid. It means the structural demand is intact across the ocean, and software names are happily following Snowflake's massive overnight lead. However, if the price drops below 30,297, the pre-market signal is entirely unconfirmed. It invalidates the setup, meaning that overnight strength was probably just a single stock event, and we should treat any failure of software to follow through as just conditional volatility. For the final checklist, we must look at the global macro variables that can override our sector logic entirely. First up is the Chicago PMI, with the consensus expectation of 50.8. If we get a print above 50.8, it confirms the broader AI capex demand narrative, meaning the macro environment supports the current aggressive AI positioning. But if that print falls below 50.0, that triggers a severe macro regime override. If that happens, the specific AI catalysts fail transmission, regardless of domestic absorption, and we'll see the market violently reset toward defensive support. Concurrently, we have to keep a close eye on the geopolitical backdrop, specifically the US-Iran ceasefire negotiations. This is a mixed risk and catalyst condition. If tensions ease, we'll see WTI oil prices push lower, which extends our risk-on momentum and supports the massive index levels we've reached today. However, if the situation escalates, WTI spikes instantly. That triggers immediate geopolitical risk aversion, which will completely offset, and I mean neutralize, all of the AI momentum we've been tracking. It's a very fragile balance of capital flow and global macro risks that will dictate the final outcome. So tracking this specific capital flow from the Asian close gives us an exact structural blueprint for the New York bell. We are watching that 30,297 validation line and those global macro triggers incredibly closely. If you want this vital Asian market intelligence delivered right to you before the US Open, make sure to subscribe. But I'll leave you with the ultimate question for today's session. Will US software demand actually be strong enough to absorb this massive foreign rotation? Or is that 4.2 trillion won short overhang about to violently snap this narrow rally right in half? We'll find out at the open.